My concern is we might slide into a depression. Right now is not a time to pretend you're Warren Buffett or something. Even Warren Buffett just sent out a warning. Stock market was blown into a bubble. The whole world economy into this bubble. These are not ordinary times. You think, I'm just going to buy the dip and the prices will keep going up. Those days are kind of over right now, right? Welcome to the real world here. Is this economy screwed up? After about 4 years of just pumping money into the system, it's running out of the system right now. It's called a 3 times crash. The first crash is going to be stocks and bonds, and that's the 401k and IRAs for many of the boomers. So all you guys hanging on to your bonds because you think bonds are safe, you're about to bend over and grab the soap on that one, man, because when interest rates go up, the bonds go down. When they raise interest rates, stocks go down. Number 2 is real estate. Home prices are dropping because interest rates are up. And number 3 is cash. When they print money, the value of cash goes down. I don't care where you're on the world. To save everybody, the Fed, the governments of all the world are going to print more money. So your savings are gone. Your dollar is gone. The bad news is I think we're heading for a depression. The bad news is I think there might be runs on banks as people panic because if people just want to get their cash out or the banks may freeze your money. So these are very precarious times and they're not normal, definitely not normal. But this is not a time to be stupid because the biggest bubble in the world, I believe, is about to bust. So right now is not a time to pretend you're Warren Buffett or something. I mean, even Warren Buffett just sent out a warning saying that the CEOs and CFOs are lying. You can't say much more than that. So these are not ordinary times. You think, I'm just going to buy the dip and the prices will keep going up. My concern is we might slide into a depression and then you'll be upside down. So, boy, you need help right now because again, stock market was blown into a bubble. This is a 3 times crash. Stocks and bonds, real estate, and then cash is going to go down because they keep printing more money. So the savers will be losers also. I'm sure some people are very rich here, but I tell you, these are not ordinary times. You know, the Fed, Bernanke, got a Nobel Prize. Can you imagine that? And those other characters just blew the whole world economy into this bubble. Just not that long ago, people were screaming, bidding up real estate prices. Then they raise interest rates and real estate prices are crashing. So if you're one of these persons caught upside down, I mean, you know, you bought the house for, let's say, $1 million, but it's only worth $500,000 today, you have some personal problems right now. So Tom, give me an overview of what you think of the world economy today. Is real estate always the best investment?
Well, hard assets definitely are. Hard assets historically always have been the best investment. Real estate, precious metals, other hard assets. We're in such a time where people just don't know, right? The markets don't know what they want to do. People don't know what they want to do. People are spending still like there's no tomorrow, and they're running up credit card debts. And you just wonder, you know, how long can this go on? They've had so much money given to them by the federal government. And now, you know, that's starting to run out. So what happens when it completely runs out? It's really a tough time.
Well, Tom, let's say I bought a house for $1 million, but now it's only worth $500,000. Is there anything they should be thinking about now before they exit stage?
First thing is, you know, if your house is still high in value, you ought to be thinking about getting a line of credit on that house so that when it does drop, they still have that available to them, because that's the problem. When, you know, a lot of people, their primary wealth is tied up in their home. Right. And if your wealth is tied up in that home and that home goes down in value, you can no longer say, well, I've got this extra bank here that I can go to. I don't have this real estate I can refinance, I can pull money out of. And so really there are some things that they can do in preparation. From a tax standpoint, You don't get to deduct losses on a personal residence. So what you might want to be considering is, do you want to have rental properties where you get tax benefits instead of personal property where you don't?
Right. Also, little finer details that the average person doesn't know, or our schools will definitely not teach. Like I said, these are not ordinary times. I have never seen, when real estate prices, just a year or so ago, they were bidding the prices up every day. And I said, this is not going to last, but that's when all the suckers jump in. And lately I've been talking to people about buying silver. Like one guy goes, oh, well, the premium is too high. I'm going, yeah, but the price is still low. I was buying silver at $50 an ounce, and today it's about $32, $33 a coin with premiums. And, oh, no, I'm going to wait for it to go. I'm going to wait for my house to go up. I think one of the most silly things people were doing was that, the house would appreciate, which it wasn't really, because they're just pumping more money into the system. So they would go out on their credit cards, they pull out a home equity loan and pay off their credit card. Those days are kind of over right now. I meet some of these guys that are like 26 and they don't remember 2008. How long ago was that? They were kids. And they're giving financial advice because their stockbroker told them to say this, or the financial planner said this, or their real estate broker told them to say this. And they give out this bad advice. I'm trying to warn people, this could be the biggest crash in world history. When people getting unemployed and all this stuff, their tax base is dropping. So the government is going to lose their income, which pays for our debt, which is at all-time highs of, some people say it's about 32 trillion. But when you count unfunded off-balance sheet liabilities, it's like 250 trillion. And then, so if if the government, the Treasury doesn't start collecting, IRS is collecting more taxes, they can't pay the debt. And so that's why Biden, one of his first moves was to announce 87,000 new people working for the tax department in America. They're coming after you, George. Well, with 87,000 new employees, that's a significant jump. That's why the middle class is being hammered. And that's the problem. Go to school and get a job. You're kind of trapped.